Gen X guy here. Another day, another discussion. Hope everyone's doing well. Another beautiful day in Tennessee. So today we're going to talk about stop saving your money. You're probably thinking, stop saving my money. What the hell are you talking about? Stop saving my money. So yeah, it's something that I've learned here over the past handful of years or so. For so long we've been taught to save money. You need to save your money. This goes way back. Save. You need to save your money. And I'm not necessarily saying that never save money. You should save money to a certain extent. And what do I mean by that? Well, you need to have roughly about 6 months of emergency money saved up for bills, living expenses, things like that. For you lose a job, accident, something happens, in emergency situations. So I'm not saying that you should just never save any money at all. That's not true. You do need to save for emergency situations and keep about 6 months of reserve in savings. And preferably, you want to keep that in something that yields more than a simple savings account. Don't keep your savings money in a simple savings account. That's the worst place you can keep your money. I think the return on a bank savings account may be 0.01%. That's horrible. The best place to put your money is going to be in a money market fund of some type. And I believe right now you can get a money market from Fidelity or Charles Schwab for 4%, give or take just a little bit. And all you have to do is open an account at one of those two. And there's others, Robinhood, there's other brokerages out there. You can open up an account with them and put your money in, earning around 4% right now. But banks are the worst place to park money to save. So I highly recommend that if you are saving money, don't put it in just a simple interest bank account. They're not paying you anything on your money. It's just the worst place you could put it. So if you have savings, you have about 6 months worth, and put it in a money market account that's yielding about 4%. And there's plenty of options out there to do that. So if beyond that, what should you do? The best thing to do with your money is to invest your money. Nobody got rich or wealthy saving money. The people that are wealthy in this country, in this world, they got that way by investing their money, not by saving their money. So that's where wealth really comes from. And so take your extra money after you get, so the first goal is to get the 6 months of reserve cash in a savings account that's liquid. So what do I mean by liquid? Liquid means that you can quickly get to it. It doesn't take more than, say, the day or a day to get to the cash in the event that you need it. So you want to be able to have that be liquid. Beyond that, you want to put it somewhere where it can earn a return beyond the 4%, or whatever the current rate is right now. And right now, you can get a money market that's paying about 4%. Not long ago, it was at 5% and just above 5.25%. So those were great returns on saved money, and that's why we had so many people that were pulling their money out of high-risk assets and putting it into money markets, CDs. CDs has been another good place to park money. And so that's why people were taking their money out of high risk, because that you could get a good return on lower risk. And that's when the government raised the interest rates. Well, that's about to change. And interest rates are about to go down. They have gone down. They went down before, I believe, the election, and they're about to go down again. From what I'm seeing and word on the street is the Fed is about to reduce the rates again, at least a quarter point. I believe that's going to happen next week, and I believe we're going to start seeing quarter point, maybe even half point reductions in the rate. So when that happens, Now you're in a situation where, your money in a money market or CDs is not going to return the kind of money that it has been. So after you start getting that savings account with that 6 months, you need to take beyond that. You need to get that money in something where your money's going to start working for you and earning you a return beyond just the 4%. And so once you do that, so then the next question is, okay, well, what do I put it in? Okay, so there's tons of things you can put it in. There's real estate you can put it in, and I'm talking specifically stock market equities. You can put it in real estate in its more traditional form, which is buying real estate, but we won't talk about that right now. We're just going to talk about equities. Equities are stocks, ETFs, things like that. And I'll do another video talking about when you invest in equities, which ones should you put your money in, and what are the pros and cons of doing that. And by the way, none of this is financial advice. You do you. I'm just giving you some what I've learned to try to help you with your money if you're struggling to figure out what you're doing with your money. So, and let me say, here's why savings is not the way to go. The inflation is through the roof. If you have your money sitting in a savings account, you're losing already, because inflation is outpacing the return on your money sitting in a savings account or even in a money market account that's returning 4 or 5%. There was a time just a year or two ago where we had inflation that was in the 8-9%. I mean, it was ridiculous. And so do the math. If inflation's 8% and your money's only returning 4% in a money market or 5% in a money market, do the math on the difference there. And it's even worse if you have your money sitting in a simple savings account where you're getting 0.1 or worse with it just sitting there in a simple bank account. So look at putting your money in something that will grow. A great place to, if you're not into high risk stuff, a great place to put your money is in dividend ETFs. There's several of them out there. Find ETFs, exchange traded funds is what those stand for. There's tons of them out there. They're very popular. Find some ETFs where you can put your money that pay dividends. And dividends are basically payments that you get, money you get back from those companies. They pay dividends. And so when you get an ETF, and an ETF is investing in multiple different companies or stocks within that fund. So it's great to be in that because you don't have to worry about the individual stocks. You can be in a blend of them, and it kind of averages itself out. So you may have one that does really, really well, and that helps boost it up. And you might have one that's not doing so well, but the others are kind of holding it up. So ETFs are great for that. So find some good dividend ETFs. That's a great place to put it. And another video here coming up, maybe the next one actually, I'll talk about when investing what you should look at investing in today's world, in today's market. In the past 5 years or so, I've really gotten into investing, and I've learned a lot about money just in the past 5 years that I wish I would have known when I was in my 20s. And I wish I was taught this and told this back when I was younger. Unfortunately, we don't teach our kids the stuff that really matters in life at a young age. We teach them all this stuff, I guess you call it the fundamentals, the basics, reading, writing, math. But we don't ever teach them, even at the collegiate level, we don't teach them about money, the things that really matter, about investing, about how to grow your money, and things like that are really important in life. It's crazy to me that we don't spend more time helping or teaching these things to our children at a young age. So I've got tons of stuff that I've learned, a lot of mistakes. I've done the math on a lot of things that a lot of investments that I haven't done that I should have done. So I want to do this video today to tell you that if you've got a bunch of money saved up and it's just sitting in a savings account, yeah, I get it. There was a time that I felt having a bunch of money in a savings account, it felt safe, right? It feels safe. I've got that money there. It's in that bank account, that savings account, right? I got my money in the savings account. It feels good and safe. I understand that feeling. I've been there before. But I really challenge you to change your mindset, and you do need to have some cash on the side. I'm not saying that you just go put all your money in the highest risk equities or assets that you can find and hope it all goes to zero. I'm not saying that at all. We all need to have emergency money, but once you get past the emergency, once you figure out what pays the bills, 6 months worth of that roughly, and if you feel like it needs to be 8 for you, fine. If you feel like it needs to be a year's worth, that's fine. Maybe you're in a job that could come and go any moment, or you're in a higher risk job or employment situation. Okay, maybe that's what you need to do, is look at changing that up a little bit. So anyway, that's what I want to talk to you about today. The difference between saving money and investing money, and like they say, wealth wasn't created by saving money. It's created by investing money. You look at the most wealthy people out there that we see on TV, and they're really the power players in this country. And how did they get their wealth? They got it by investing. They didn't get it by saving money. Do they have money saved? Sure they do, but not a lot. A lot of it is in investments that are working for them and returning them more income, throwing off money, and then that money compounds, and the compounding effect of money, that's what you're after. Growth. You're wanting growth. You want to turn that money, that $10,000 into $20,000, or you can look at it like this. You want to take $10,000 and you want to 10x it. Well, you 10x $10,000, that's $100,000. Well, what is 10xing $100,000? That's $1 million. So that's kind of how you want to look at it, is the compounding effect of money. Saving money in a simple interest account is not compounding anything. So I've got examples of that I can share, of real life examples of the versus, A versus B, and I'll share those with you here in another video. But that's what I want to share with you today. That's all. Hope you have a good day. We'll do another one tomorrow. It's a beautiful day here. I'm at this park walking, trying to get some exercise in. That's it. Gen X guy out. Have a good one. Bye.